Hello, everyone. Welcome back to the IRD Invest conference, where we're exploring the theme, addressing the need for change today. Our next presenter is Dr. Chris Hart, who is founder and managing director of Oventus Medical. Oventus is an Australian medical device company with a proprietary oral device for the treatment of sleep apnea. And as the world went into lockdown and sleep and dental clinics were closed, Oventus quickly pivoted its business to what is now primarily focused around telehealth, providing virtual consults along the patient's journey and delivering dental impression kits and finished devices directly to patients at home. Today, the majority of Oventus patients are treated from home, with Oventus having greater control over the patient's journey, and this resulting in higher conversion rates. So with that, I'd now like to hand over to Chris, who will start sharing his screen, and he'll tell us more about what Oventus is doing. Thanks, Chris.
Great, thanks, Jane, and everyone in the IR department. I appreciate the invitation to speak, and I appreciate everyone's time as well. A changing environment. We just experienced some of the challenges with that, but all in all, the way that the market's changed and the way that people are accessing healthcare as well as consumer products, I think, really has evolved quite quickly in the last 12 months. So next slide, please. Yeah, so we're a medical device based out of Brisbane. We operate in the sleep apnea space. We've got, arguably and probably the most effective therapy in the market, and it's a non-CPAP market, which I'll show you in a minute if you're not aware, but the face mask, reverse phase vacuum cleaner, massive market, multi-billion-dollar, fast growing. There are existing treatments that are effective but not well tolerated. So, only 1 in 5 patients have been diagnosed, and out of the ones diagnosed, more than 50% of them being in therapy. So there's 3 million Americans at the moment, which represent about 55% of the world market, with 3 million that have been diagnosed and outside of care, and 5 times as many, or more actually, potential patients there that have sleep apnea that yet to be diagnosed. We grew reasonably well through COVID. We'd hoped for more. We were operating respiratory mini clinics. We were launching them from about October 2019 on. And we were launching respiratory clinics 6 months ahead of the world's greatest respiratory pandemic. So there were some headwinds there that we had to address in terms of the role of our clinics. And, like many other companies, we managed to grow revenue up 160 to 190% year on year, 25% quarter on quarter growth in our telehealth platforms. And that's been the backbone of our expansion through the global pandemic. Next slide, please. So CPAP is, we know it's effective. Out of 100 patients diagnosed with CPAP, 35 will refuse therapy outright, 65 will do a 90-day trial, 15 won't make it through 90 days, and out of the 50 that do, half of them will hand their CPAP back or abandon therapy within 12 months. So it's a very effective therapy, but it's not well tolerated. Next slide, please. And I was one of those patients where due to nasal obstruction and mouth breathing, I wasn't able to tolerate CPAP. I stopped breathing or slow down breathing about 50 times an hour. With the mask on, I get down about 8. With the Oventus technology, I get down to 0. And not every patient gets that result, but many do. Will get very similar results. In fact, clinical data through our clinical trial program, where we have studied over 200 patients, indicates that over 80% of patients will achieve CPAP-like outcomes without the need for CPAP, and we have some data coming out shortly that supports that position as well. And the concept is that instead of pumping air in, we can let the air pass through an integrated airway. And in doing so, we're bypassing multiple levels of obstruction, including the nose and soft palate. We're stabilising the base of the tongue, and we're allowing the patient to ventilate. So we're using their own physiology to allow them to breathe. Next slide, please. And as I said, we've run multiple clinical trials. We've done randomised crossover studies with and without the airway in our oral appliance, which is the second line of therapy normally for CPAP. We've shown that they're significantly more effective than that, increasing success rates from 56% to 80%. And now with other therapies such as positional therapy and some other medications, we're showing that we can treat actually up to 100% of patients successfully without CPAP. So it's the only non-CPAP therapy in the market that can deliver CPAP-like results, but in the convenience also of a mouth guard. So we get a quarter CPAP in the pocket. 80 to 90% of effectively CPAP more than nearly twice as much because it is so easy to wear. Next slide, please. So when we addressed, the US market, we understood that there was a new technology that we had to engage very closely with sleep and respiratory physicians to introduce it to the market. And so our approach was to work with the sleep groups to set up digital mini clinics. So we only needed one scanner. Traditionally, a patient would go to a dentist to have an oral appliance fitted for sleep apnea. We had the dentist attending on site in the sleep clinic using the digital scanner. So we reduced and simplified the patient journey, and we're able to actually then share the revenue and the value, unlock the value in those patients for the sleep channel as well as the dental channel in a collaborative care model that allowed them to work together for everyone's benefit. We've launched around 42 coming into COVID sites, and we ended up with 2 at the height of COVID. And we very quickly had to rejig our workflows and develop a virtual patient journey. So we started engaging with patients online, as did sleep physicians. So the sleep physicians had already gone to telehealth. They had decided that they weren't going into the clinic. They were doing home sleep testing instead of in-lab testing. So we very quickly set up a telehealth platform to allow our patients to engage with our team online as well as the sleep physicians. At that point, we were still going into the clinic to scan the patient. So towards the end of last year, we developed a home infection kit, which under dental supervision, we're now delivering identical treatment outcomes to a physical facility by treating the patient at the point of care or in their home or wherever they may be. So there is considerable pent-up demand. Patients now are used to being treated in the home. Telehealth has become mainstay method of providing care to patients, and it's actually a patient preference. We see that 70% of patients we engage with would prefer to be treated in the home. Patients are consulting Dr. Google, and that's a great place to engage with these patients and let them know about what we have available to them. And going virtual uncouples us from physical facilities, which reduces our fixed costs and makes us highly scalable on a very low cost model. Next slide, please. So, as I've said, we've gone virtual. We did manage to grow sales through COVID. We had significant growth quarter on quarter and year on year. We're engaging direct with the consumer at the moment. They are the most important decision maker in the value chain, and we now have the ability to engage with them directly in their home, but provide them with the clinical and professional support from sleep physicians and dentists and other clinical support people to allow them to make good decisions for their clinical outcomes and to provide the same level of care to them in the home as they would ordinarily get in a clinic. So our go-to-market model is very much patient-centric and pandemic resilient. So the ability to provide the same level of care anywhere, anytime, selling direct to consumer. And importantly, now we also have national in-network insurance coverage in the US as well. Next slide, please. So you'll see year on year we had some very significant growth. The virtual sales model enabled us to continue to grow through the pandemic. We have this customer capture model, which we only really launched in February, and already it constitutes 2/3 of all referrals to our business. So previously we were reliant upon other businesses and clinicians to refer us patients. Now we can take that into our own control, and we can actually bring those patients into care directly. And when we do that, we're able to manage the patient journey from end to end and make sure that they stay in care and they get the best care available to them. As I said, we have a national group of coverage with dentists in the US and Canada and Australia, and we are able to market to those patients and bring them into care, both with sleep physician support and dental support. Next slide, please. So we have these different channels. Traditionally, our device would have been sold in the dental channel on the far right there, and it would have been done on the prescription, and still is done on the prescription of a respiratory or sleep physician. What the virtual program has allowed us to do is to market to a patient in a sleep facility, in a shop where they'd ordinarily buy CPAP, in their home, or in the dental clinic. Irrespective of where they've come from, we run the same patient management process. And what that means is with this centralised patient management, we're very close to the patients. We develop very strong relationships with them, and we have a very scalable model where the same process can be applied across all channels as we bring them into care with our contracted sleep physicians and dentists. And as I said, this ability to sell directly to the patient with third-party coverage from insurance companies means that we're now in a really good position to rapidly scale and expand our clinical business model. Next slide, please. So we still have 32 active sites out of the 42 that we had that ended up being 2. We've reopened 32. 13 of them are totally virtual, where we no longer go into the clinic to treat patients. So the rest are still physical facilities, but we bring everyone through the funnel of telehealth, so the direct-to-consumer virtual or physical site. And remember, the direct-to-consumer model, we don't need to be attached to any particular site to deliver care to a patient in their home. So on the back of that, with our customer acquisition model, we've increased telehealth consultations by 25% quarter on quarter. And while it's still in early stages, only 6 months in, our direct-to-consumer customer capture model now constitutes 2/3 of all patient referrals. Patient flow is also starting to increase across the sites as the pandemic, I wouldn't say wanes, but becomes more manageable. And as we're now in network with insurance companies, our conversion rates are increasing as well. So whereas previously when we first launched the direct-to-consumer model, it was an out-of-pocket cost, a large out-of-pocket cost to the consumer, being in network with general insurance means that those out-of-pocket costs are actually greatly reduced. And that in turn increases our conversion rates, which lowers our customer acquisition costs. So next slide, please. And you'll see in a minute as that as we scale telehealth, customer acquisition costs reduce. And we have a few stages in that journey. We build awareness. We do that through marketing on social media, on Google platforms, pay-per-click, as well as referrals from existing patients. We then engage with those patients virtually to determine whether they're a candidate. We determine whether they have insurance coverage, what their out-of-pocket expenses might be. We run through the technology with those patients, and many times, 30 or 40% of cases, those patients will move into therapy straight away. The other patients then stay on our database, which we remarket to. In addition to that, once we've treated a patient, we have an opportunity to ask those patients to refer family or friends. When we first launched this model in Australia, we actually got 1.8 referrals, new patient referrals, within 6 months for every device that we delivered. We're only 6 months in at the moment, so we're tracking that in North America and the US and Australia again as well. Next slide, please. So as we increase our conversion rates by reducing out-of-pocket costs, increasing our access to care with dental, sleep, vision and insurance coverage, as well as being able to remarket to our existing database of 3,000 patients, our customer acquisition costs, the amount it costs us to acquire new customers is falling. And we're aiming to get to a point where we know exactly for every dollar that we spend on customer acquisition, irrespective of channel, what's the gross margin generated from that investment, and how does that fall to the bottom line to cover our fixed costs and generate free cash flow. And so that's the equation that we're working on. We do still have sites, physical sites launching, but irrespective of whether they're physical or virtual, the same equation still applies, whether we're paying service fees to providers or whether we're spending money online in digital marketing. There's a cost to acquire those customers, and that's falling as telehealth increases. And telehealth has continued to increase at the same rate or if not a greater rate as it has in previous quarters. So we're very excited about coming to this tipping point where now we know what it costs to acquire a patient, what the revenue generated from that is, and how much of that we retain as gross profit. And that is something that we're very focused on. And by the end of this calendar year, we're aiming to have very good predictability and reliability on that equation so we can start to share that in market as to what the future might look like. But we're really excited about the opportunity that lays ahead. While COVID has been incredibly challenging, and we have had to adopt new clinical business models, the opportunity that has presented itself as a result of that is actually far greater than the opportunity we had going into COVID. Next slide, please. So as I said, our sales growing year on year. We have the direct-to-consumer and virtual channels. They're now the main pathway for customer acquisition. There is a longer sales cycle. Now that we're in network with insurance, it actually can take up to 12 weeks to recognise that revenue, and then more time, 60 days or more, to have cash receipts for that. But what we can see is the funnel building. The number of patients going to the funnel is growing, double-digit growth quarter on quarter, and the conversion rates are improving. So we're getting a really good sense of what the future looks like, and we'll start to see the sales increase from the activities we're doing now and previously in the December quarter. So we can certainly see the swell starting to build in the background. Next slide, please. So there is a bit of a trade-off. When we sell direct to dentists, the patient is just manufacturing time. The dentist has done all the work. It's very hard to capture that market. It's a cost-competitive market. we did decide to focus on the sleep channel. When we're operating in a fixed facility, the patient has a diagnosis under the care of a sleep physician. So really it's about verifying their insurance and setting up the dental consultations and manufacturing the device, so a bit longer there. If we're in a virtual scenario, the patient may require a new prescription, particularly if they just failed the CPAP trial. So that adds another couple of weeks to the patient journey. When we're operating direct to consumer, it's very likely 80% or more of patients, their diagnosis and prescription has expired. So we do need to engage with our sleep channel partners to get a new diagnosis, a new prescription, and then engage with our dental channel partners to deliver our technology. So it does add some time to the patient journey. The good news is that, in network with insurance, operating direct to consumer, we have a very high conversion rate, very low customer acquisition costs, and low out-of-pocket costs for the patient. So we're seeing those numbers start to climb. And within 3 months, we only started the network care in the last 30 days, and we're already seeing that funnel start to mature very quickly. Within 3 months, or another 2 or 3 months, we'll have very good visibility on that. Next slide, please. So we reduced operating expenses to address this market. We realised that we had to restructure, that we didn't have the tools we needed to sell direct to consumer and manage a scalable patient journey remotely. So we restructured, we reduced our operating costs to divert more funds to that expansion of that program, and that's working extremely well. We continue to build on that. We're investing more into customer acquisition through digital marketing campaigns, and we're improving operations at the back end to reduce costs as we scale to make sure that we generate more free cash flow. Next slide, please. So we went through a phase of generating demand in the last quarter or two. We've done that really successfully. We know what it takes to recruit a patient. We're now converting the patients to therapy, especially now that we have complete coverage across the country in the US, in Canada and Australia with good insurance contracts in place, higher levels of reimbursement, lower out-of-pocket cost to the patient and higher conversion rates. And as those devices start to flow, as we scale manufacturing, it gives us the opportunity to reduce our COGS and to divert more cash flow into customer acquisition, which becomes a compounding equation. It's a self-fulfilling prophecy. So we have a very clear program underway across whatever channel we are operating in. We're generating demand, we're converting patients to therapy and reducing costs as we go to improve our ability to capture more patients and generate more free cash flow. Next slide, please. So in the US, John Cox has just joined the team as President and COO. He's already making a great impact, particularly with his expertise in the direct-to-consumer marketing in the sleep space. He has a deep background in that area and operational design device manufacturing. So really pleased to have John on board. We have a US non-executive director, Jake Nunn. Paul Malloy has been very supportive as he's gone through this phase in the last 12 months, which has been quite challenging, and we've appreciated that guidance as we started to evolve the model. Next slide, please. And in Australia, we have Mel Bridges, Sue McClellan as our non-executive director and chair, and then Steve Bernard as our company secretary. So great support from the Australian directors as well. And next slide, please. The most important part of what we do and the centre of everything we do is our patients. And as long as we look after these patients, everything else will look after itself. And we always get great feedback from patients on the technology. So we're very excited to be in a position we are to offer this therapy option, which is the most effective therapy on the market, direct to the patient at low out-of-pocket costs and in a highly scalable business model. And that is where the future lies for Oventus. And as painful as the pandemic has been, we have adapted to the new normal, and I'm very excited about the opportunity that lies ahead. Next slide, please. And happy to take any questions, provided I can hear them.
Thank you, Chris. Hopefully you can hear me.
I can. I've got you now.
Excellent. Okay. Well, thank you very much. I note that you raced to make up the time that we lost at the start, so appreciate that that effort of yours. So, and we do have a number of questions. We've got a few minutes to get through those. As always, if you've got any that we don't get through, please follow up with us directly via Investor Relations. So the first is, how are you finding your leads under the direct-to-consumer model, and what do you think are the best platforms for lead generation?
Look, we did a lot of in-market testing from February on, mid-February when we launched the program. And the market changes. So the digital market changes daily, weekly, monthly. So you can't say this is the best channel because that will change tomorrow. But the ability to track the patient journey from our outreach to their first impression of us all the way through to patient journey complete and ask for a referral, The ability to track that patient journey digitally means that we can continually refine where we're presenting the materials to patients. So that is just an ongoing process. We're operating across all of the usual platforms, but our marketing mix will change depending on the conversion rates we're seeing. And then, of course, once they're on our database, it's all internal marketing, which is basically free.
Thank you. Okay, so a question here around impression kits. What are the failure rates for the dental impression kits? And are you finding that patients are competent enough to run through impressions themselves?
So we have a 98% fit rate at the moment. We tested that pre-market, and we did a pre-market study on that and spent a lot of time developing the workflows and processes to ensure that we deliver the same standard of care virtually as we would in the clinic. And so some patients are amazing. Other patients, it does take a couple of goes to get the impressions. Having said that, about 30% of patients still want to be seen or elect to be seen or need to be seen in clinic for various reasons. So, it was really important to set up that network of clinics where we had both options available to patients.
Thank you. So a question here on recent quarterly sales. So I noticed that the unit sales were down over the prior quarter. Could you please comment on that?
Yeah, I think when you go direct to consumer, as I mentioned on one of the slides, the patient journey time increases. So if we're selling in the dental clinic, it's about 3-week turnaround. If we're in a sleep lab where the sleep physician is engaging directly with the patient, they've got a current diagnosis and prescription, it's probably about 8 weeks. They've just got to go through the dental workup, dental consultations and manufacturing, 6 weeks. If we go to a DME or a CPAP shop, they may need a new prescription, so we've got to get them back to see the sleep physician. That adds a couple of weeks. When we're direct to consumer, we've got to start the process again for most patients. So we need a sleep doc consultation, a sleep test, diagnosis prescription, then into the impression phase. So we've seen a shift in mix from fixed facility and dental channel, and the dental channel has reduced significantly. A lot of dentists weren't overly pleased that we sold to direct to patient, even though they are the end recipient of that value. There are some that don't understand that, and over time that will be resolved. But it's really a change in channel mix from dental and direct through sleep physician into the virtual channels, which has a longer lead time to therapy. I can tell you that telehealth continues to accelerate, and our conversion rates direct to consumer were originally lower because we didn't have insurance coverage. But now that we have insurance coverage nationally, those conversion rates are heading back towards the same levels we got when we were operating directly with the sleep physician. So there is a lag there, but we're very comfortable that funnel is continuing to build.
Okay, thanks, Chris. And we'll make this one the last question. So you mentioned being in network in the US. Can you talk more about what that means?
Yeah, so similar to Australia, where they have what we used to call preferred provider contracts. If you go to a Bupa dentist, for a crown, for instance, you might only have to pay $300 out of pocket or whatever the number is. But if you go to a dentist that's not contracted with Bupa, you're going to probably pay $800, $900, $1,000, even $1,200 out of pocket. And it's the same in the US. And if we're out of network, the out-of-pocket cost to the patient is higher. If we're in network, then the out-of-pocket cost is lower. So we have to do two things. We need to achieve national coverage, and we're looking to achieve in-network insurance coverage. So we completed both of those. We reached both of those objectives at the end of last quarter. And so since then, we've started to bring patients in care through the in-network network of sleep physicians and dentists that we have that we're contracted with.
Excellent, which is obviously brings a lot of additional opportunity for Oventus and for patients. So terrific. Well, we might leave it there. Thank you very much, Chris, for making time to speak with us today and for working through the tech issue earlier on. And look forward to keeping across your progress.